With so much to swallow on this last trading day of July, let's get right to the floor show and rock star tech analyst Dan Ives of Wedbush, who covers, well, so much: Apple, Rivian, Microsoft, Tesla, Lyft, Uber, and more. Dan, one thing this earnings season I feel has taught us and investors so far is that some companies, particularly in tech, and I'm thinking of Google, Microsoft, and Apple, are navigating the economic bumps way better than others. What should that tell investors?
Yeah, it's a great point. And look, I think the strong have gotten stronger. That's really the dynamic during earnings season. Armageddon-like expectations, but look at Apple, Amazon, Netflix, Tesla, among others. I think it's a bifurcation of the tech space. That's really what's playing out, but it's being led also by cloud. Microsoft, obviously Amazon, just massive numbers.
Yeah, and I want to drill down on Apple here. Everybody's talking about the iPhone sales. I looked at the China regional sales, and to me, I loved your line in your note where you basically said, well, you get to say it, but you made a comparison between the performance of that, considering there was a 2-week shutdown during the quarter in China during the lockdowns. You made a comparison to a certain movie.
Yeah, I mean, I think for Tim Cook, this was his Top Gun moment. I mean, a maverick-like ability to navigate what's just been an unreal shutdown in terms of China. That's essentially, that was a $4 to $8 billion headwind, and they came out on the low end of that. China down 1%. I mean, Liz, I think that was really the headline. That was a shocker that it was so good. Also, demand starting to come back. And that's important going into the drumroll iPhone 14 cycle. That's why, in our opinion, Apple's a Rock of Gibraltar stock that can navigate the economic dark storm.
Yeah, well, I love all of that, but I find what's really interesting, and I know you don't specifically cover Amazon, but you do cover Rivian, is that Amazon has very forgiving investors this time around. Second quarter in a row of negative, profits here. What I think is interesting, too, is that it's blamed both times on Rivian because of its huge stake there. I actually saw my first Rivian on the West Side Highway, so I did it safely. I snapped a picture. Here it is. And I couldn't believe it because I remember I used to do that when I saw Teslas about 5 years ago because they were such a rare sighting. Tell me what you think about Rivian and how it's going to get back to, I guess, its better picture for the stock.
Yeah, and for Rivian, the problem has been they just can't produce the cars. I mean, that's been the big issue from a chip perspective, 90,000 reservations. Look, I think it's a unique car. It's a unique sort of ecosystem from a software perspective they've built. And I think when I look out over the next 1 to 2 years, I think they're a clear winner in EVs. But no doubt, I mean, they came out with huge hype. It was a disaster the first 6 months. Now they're starting to sort of build back credibility 1 quarter at a time. But just like you talked about, I mean, in this economic environment, you're really going to sort of separate, I think the rock star companies from the ones that fall by the wayside. Even look at digital advertising. Look at Snap compared to, let's say, the likes of Google and others. Yeah. The clear bifurcation that's happening.
Well, yeah, and Faraday Futures, you cover that one. It has been pretty disastrous, down about 81% over the past year. I know that is sort of one of these emerging ones. So unless you're in the lead like Tesla, which brings me to Tesla, tell me what you think is happening here, because the stock is starting to improve. Elon Musk has started to believe, or at least make some noises, that maybe we're through the inflation. So at the moment, Tesla's up 4.5% with about 52 minutes left to trade. Where does this go?
And this is another example. I mean, some of what Apple did in China. I mean, Tesla, they navigated much better than expected. Now you're seeing China come back, and that's the hearts and lungs of the bull story in Tesla. And also that profitability and gross margin, I think, was better than expected. I think, in my opinion, going into the second half of the year, this is a company that could be on a trajectory, for over 2 million units going in 2023. And in the EV landscape, it's still Tesla's world and everyone else is paying rent. And I think that's what you're seeing play out, especially also in a risk-off market. Investors right now, they're catching up to risk. And that's why you start to see with Tesla, but it continues to be the 2 pillars, Microsoft, Apple. Those are the Hall of Fame quarters.
And finally, we got to run, but your price target on Apple right now, I believe, is $157.35. You've got an outperform. The stock is at $162 and change. Knowing what you know now, are you going to raise your price target?
Yes, we have a $200 price target. That's our price target. But ultimately, I think this is one, Liz, in my opinion, as they navigate, and then what I see on the iPhone 14, I believe over the next 6, 12 months, this is a $3 trillion market cap.
Yeah, you have said, well, it passed that earlier this week. We do have it right now at a $2.6 trillion market cap. But listen, the stuff moves pretty quickly, especially when they've got the new phone coming out, or at least announced in September. Dan, great to have you. Thank you so much.
Thank you.